everyone, Yusuf here. This is going to be part 2 of the FootPrint series that I'm making on YouTube. This is going to be discussing how to utilize the FootPrint to look for continuation for trades that you're in already. Real quick though, before I get into it, if you're not following me on Twitter, make sure you're doing so. I tweet daily plans, market profile charts, order flow clips, and some other useful stuff over there, so go ahead and give me a follow. I also created a Substack. It's 100% free. I post some valuable stuff over there. My most recent post discussed how to use higher time frames to generate ideas and then how to confirm them intraday with certain order flow setups. I also tweeted, not tweeted, but I also posted a few different times a few different plans that I had and some reviews of the session. So things such as the market profile, the footprint, the tape, stuff like this. So link for this is down below. It's, like I said, 100% free. If you're also interested in purchasing Jigsaw Trader funding, you can use code USEF for $30 off. It's the DOM that I use, and in my opinion, it's the best DOM out there. And also, if you want to check out Apex Trader Funding, it's an online platform. I highly recommend checking them out. Link for this will be down below. You can use the coupon code in the description to get the current best promotion. Now that all that's out of the way, let's go ahead and talk about how to monitor a trade using the FootPrint. So what is it? Monitoring a trade is simply us just looking at the orders coming in and seeing if they support our open positions. It is my main way of monitoring trades to see if there's continuation from buyers or sellers. Footy gives us the detailed information on the buy/sell orders that a traditional candlestick would not. See if buyers or sellers are trying to discover new prices and how successful they are at doing so. The main way of utilizing the FootPrint for continuation or like monitoring positions is to look at the calculated values in darker shades specifically, in my opinion. The reason why I use the FootPrint to monitor continuations, because the thing with the DOM is more about me looking to see the way the price ladder moves and if I want to get in. But after I get in, it's a bit tougher to monitor. The FootPrint displays in a much more easier manner. So let's go ahead and discuss a few examples, my thought process behind them. So May 5th, 2023, I took this short 71.70 for 1 MAE, 192 MFE. My thoughts behind this were pretty simple. We had this little ledge over here, and breaks of ledges lead to waterfalls. And I even say that right over here. I said, looking at the structure, we can see how there's a ledge at 74.70. And once again, breaks of ledges lead to waterfalls. So let's go ahead and look at the FootPrint charts over here. So market opens and we see this instant selling pressure come into it, get a nice pullback into 74.70 where I short, and we see how buyers are failing to take us higher. The break of the previous low of day is met with large negative delta, increase in tape speed, constant one time framing lower. See buyers try to lift the offer in that 15-minute period, but they fail to take us higher. Sellers step back in and continue to keep pressure on them. Let's go ahead and look into this. So once again, the market opens. The previous low of day is 74.53. Come into it, we see some aggressive selling coming into it, but we're able to get a nice little pullback into 74.70 where I short. And then when we come back down to test it, we see this aggressive selling come into it, break it, and then for anyone that doesn't remember, one time framing lower is when we constantly penetrate the previous low. So in this chart would be the 5-minute low. So we penetrate the low, penetrate low. You can just keep on seeing, keep on going lower and lower. And then looking at this, once again, you see these dark shades, telling us that sellers are taking the initiative below the previous low of day and below this ledge on the larger picture. They're coming in, they're breaking it, and they're getting aggressive. No buyers here to absorb, so it implies that we're going to head lower, and that this trade that I'm in should work out, and it's a good trade. We then see on the way down, volume starts to pick up. So in the 925 candle, only 3,699 contracts were traded, but then on the way down, we can see 7,800 traded, 7,000, 6,500. So these darker shades indicate that the volume is increasing. We can see the volume per second is also increasing, implying that sellers are stepping in and we're conducting more volume. 413 is the delta for this 5-minute period. -843 over here, And then you can see how the cumulative delta is also becoming quite negative on the day. We continue to see this, and then we see 9,470 volume conducted here, penetrate the next candle's low, penetrate the next candle's low. And we can see some buying occurring on the candlestick, right? We see someone just tried to buy 944 quite aggressively, but they failed to take it bid. And we can just see how we're constantly one time framing lower, and how volume is increasing on the way down. Delta is increasing, and we're seeing the range kind of expand. See cumulative delta continue to remain negative, and then see delta continue to remain negative, and then this is what I was talking about in that 15-minute period, where we start to see delta kind of buyers come in, try to hold us over here. You can see that the delta for this period was 466, 298, 429, but when you were to look at this, the amount of volume conducted in each of these 5 minutes is much less than the amount of volume conducted here and conducted here. And then right after, kind of had this little time to consolidate. Sellers step back in, see an increase in volume, 6,202. So in this 5 minutes alone, it's more than these three. And then we see delta become negative again, 746. And then sellers just continue to keep pressure and just keep on drilling this thing lower and lower. And then this is the action for the rest of the day. You can just see, once again, it's almost as if there was no bid. Sellers were able to just walk this thing down, close it on the lows. And you can just see how delta remained negative throughout the whole day. Increase in volume on the way down with range expansion. The next trade is the trade that I took on May 3rd. So just some context for the day. This was the day before. We shorted to the lows, set to gap down. This is where the profile opened up right about here. And then I wanted to see how much volume we conducted near the open. Little to no volume done at the open indicates that we should just go with the little to no volume conducted at the above the open indicates that we should just go with the gap. So all right, market got gap down. See any interest above open get met with buyers getting absorbed. If we truly are going to rip higher, we should see an open drive, not buyers getting absorbed. Given this information, I hit in short, and then look at the reaction at 69 even. Knowing that as long as we held below, I should continue to hold runners. 1150 see an increase in volume with large delta, with most volume done in the 5-minute increments. And that's where I closed my runners, because it implied that buyers are stepping in and volume picked up and the low is put in for the day. So this is the candlestick. Not the candlestick, this is the footprint. You can see we open up right about here. See some aggressive buying coming into the highs. 355, 340, 383, 286, 359, 427. So aggressive buying, but you can see how we're failing to go higher. We then see I then hit in short when I spotted a nice little setup on the DOM, and once again buyers were kind of just getting absorbed. And then right over here we can see this increase in volume, a total of almost 7,000 done with negative delta. This is the most amount of volume conducted in these 5-minute increments so far. At the 69 even price point, we see a buyer try to buy 1,700, but they failed to take us to go bid. And we kind of just see how we consolidated for a bit. And then if you look here again, sellers step back in, increase in volume, negative 448 delta. And then once again, sellers break it over here again. They break the previous low, put another low with 5,726. And then you can just see how kind of just chopped around a bit. Then we get another increase in volume, 5,102 with negative delta, 6,000 volume with negative 749 delta. And then this right here is, I had about like 2 runners left. But this candle right over here is what told me to kind of get out of my runners. We see the most amount of volume done on the day, 9,600 done in this 5-minute period, with a delta of 1,584. See this break above, and then we can see how buyers start to kind of take control, and then we kind of just we shot up $1.05 from there, so 105 ticks. So I ended up closing it there. And this is just the rest of the day. You can kind of see we just chopped around. Little to no volume done in these 5-minute periods compared to before, besides near the close. But once again, since it's near the close, we can't really pay too much attention to them. It's a market profile. Next up is the trades I took on May 19th for 3 MAE, 140 MFE. So just some context, I was originally long pre-market 73.19. We're set to gap up. So I decided that if we were to break 73.12, it can act as resistance, and for us to kind of explore back into lower prices. I'll explain it right over here, but 519 right over here, we opened and we found resistance into this low volume node. So when I saw that, I moved my stop loss to 72.12, and then I also put in a sell order because I figured once we find acceptance back below 73.12, we should kind of just go much lower to like this low volume node where we put in a low over here. So that was my thought process behind that. And another reason why I kind of went short is because of the touch of the 2 standard deviation. You can see how we rejected the 2 standard deviation up here, and then it came down to the 1.5. But the rejection of the 2 standard deviation plus it being a low volume node gave me the ideas to lean in short. So I hit in short there. It was a DOM setup. We see sellers getting quite aggressive into the 73.12 area. You can even see on the footprint 291 to sell, 435, 387, 332, etc. Just very aggressive selling. You see someone try to buy 500 true, but someone matched them with 336, and also got absorbed. So we continue to 1 time frame lower until we come over here. See a decent amount of volume being done, but still delta is quite negative on the day. Kind of see this little consolidation with a break below with an increase in volume. You can see how while we're consolidating, only 2,000, 1,500, 1,600, 1,300, 1,300, 2,000. Eventually see this break below with 3,700 with a pretty negative delta done in the 5 minutes of 295. Increase in volume as well, 384 delta. And then this right here, when I saw this, I was kind of monitoring to see how we'd react. We had 498 with some decent volume conducted here, 2,714. But you can see how we kind of just popped back into this little consolidation area, and then we continue to sell off down to about 71.28. And then this, hold on, I'm sorry about that. This right over here is kind of what told me that there's going to be this lack of interest from buyers. Lack of interest from sellers to continue to push lower, because we see an increase in volume, 6,435, but compared to before, we see a little break below it. But sellers, the fact that we saw this increase in volume, but little to no range expansion or like follow through, implied that this move is kind of over, and we kind of just chop around probably for the rest of the day, which we did. And then the final example here is from May 25th. I closed the last runner for 200. I managed it on my phone, but so a mix of this was we see a touch of a VWAP, and this is going to be a bit of a different thing, but this is cumulative delta displayed in a different manner. But you can see how there's no new high put in, and we come back to test the 0 delta. We touch VWAP, use it like this for pre-market. And just some context, this is the chart for 525. See it open, come back into this kind of like this tail area. So I accidentally cropped out the calculated values for the first few, but those are kind of the most important. See this open. Once again, this is it. Just to remember, I'll come back to that, but see this open, and then at 9:15, we see, let me quickly go back to here, 9:15, we see a total of 9,425 volume done. That's more than even at the open. And we can see the reaction from that. We see this huge 76 tick bar done. And then we continue to see this increase, and we see a tape bomb. So for anyone who doesn't know what a tape bomb is, these are in three. Each bar over here displays 3 ticks worth of data. So the fact that we saw a 9-tick tape bomb implied that there was a seller who got very, very aggressive, and it looked good for me for continuation. But someone put in a sell market order that was so big that they swept 9 ticks of price. So we see that their total order was 94, 195, and 106. You can add that up. That was the total for the tape bomb. So see the tape bomb come through, looks good for me. Large increase in volume with large range expansion. Have an inside candle with another inside candle with a break below, inside candle, small break below, pullback over here on an increase in volume with a negative delta, and then we break the previous low with an increase in delta and an increase in volume, but can't even penetrate the previous candle's high. And then coming into this, we kind of see a decrease in volume as we're going higher. And you can kind of see how sort of form like this flag on decreasing volume. And then when we finally break this flag, we see an increase in volume, 3,828, with a delta of negative 562. Then we see this one time framing lower, we keep breaking lower and lower with this pretty large, in this 5-minute increment, pretty large range, 0.51, with 5,741 volume conducted with 707 delta. And then the reason why I figured to close shorts is because if you were to look specifically at these two at 1140 and 1150, see large increase in volume for both of them. But if you were to look at the reaction we got from them, even though we put in this much volume, we only had a 0.40 tick range in this 5-minute period. Right after that, we had that little inside candle with a little break below. Then this increase in volume, while delta wasn't too negative, implied that sellers showed no interest in taking us any lower, and buyers were sort of stepping in. We can even see how buyers are starting to show some darker shades of blue here at 376, 542 over here at 316, and this thing kind of just bounced from 70.98 all the way up to 72. So yeah, this is just one of the few different ways that I utilize the FootPrint. The main ways is to look at the calculated values, look at the amount of volume done per second. Is delta flipping? Are buyers or sellers getting rewarded? And kind of just using that with the market profile to give you a better picture of what's going on. I hope this video is helpful. I'll see you guys around.